Tuesday, April 30th, market analysis, Stan Ehrlich. Good morning, 10 o'clock California time. Announcing, I'm a speaker at the Investment Masters Symposium, Invest Smarter, Trade Wiser, blah, 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 blah. Cyclical analysis and how it applies to automated trading system is my topic. I'll be speaking on May 9th, I believe around 1 o'clock, maybe a little bit earlier, but about that time for about 45 minutes at the Hyatt Regency San Francisco Airport. First seminar I've done for a couple of years. This is the Money Show. Presenters Kim Githler out of Florida. And it used to be TradeStation. It used to be Tim Slater's Technical Analysis Group Seminar Circuit, TAG, Technical Analysis Group, and many other, about 150 or so over 4 decades. Okay, enough. Voila, close. We start out with the indexes and go to the futures. Well. We have a big down move this morning in the DIA. I'm sorry, well, all the other indexes as well. In the E-mini, so we've made lows lower than yesterday, and that would be Monday, and last Friday as well. You remember last Thursday, there was that really, really big rally in the last hour of trading for the session of the E-mini, which was between 1 o'clock and 2 o'clock California time. And that's when we had that really big spurt up that created a bullish engulfing buy signal for the ER, which we did get into, and it seems to have lost a little tiny bit of money. Unfortunately, we didn't get out quite quickly enough. We could have, but I left the default inputs work, and that's okay. I'm not concerned. Now, my opinion has been that this market is going to challenge previous lows of last week. And let me go to the daily chart real quick. And that would be down around 49.50, let's say, 60, whatever. And we are at 50, 90. So that's a ways down yet. But 1 or 2 big down days, and all of a sudden we're real close. And that's maybe what we are about to see. So no particular reversal today. We are out of our previous longs, so only from a few days ago, a little bit longer than that on the DIA. We got the bottom and the top on the DIA. We'll get to that in a minute. So we're on our way down, in my opinion. Looks like it's going to close lower than the lows of the last 2 days and close at the second lowest close in the last 6 days. So all of that adds up to weakness. I don't see it turning around. I see it coming down to the support area at a minimum 5,022 to 5,002, but really down to 4,900 to 4,800. That is my downside objective in the next 2-3 weeks or so. Probably, I hope before the end of next month, and next month is tomorrow. Next chart is the short-term 5-minute chart on the E-mini, and you can see this morning it's been stair-stepping its way down. Spider. Starting to close a gap that it created a few days ago. That's the first possible support, but gaps are occurring less and less and less often because more and more markets are open 24/7 damn near. E-mini is 23 hours a day from Sunday afternoon till Friday afternoon, much like forex, which doesn't even close at all, not even 1 hour during the week. So here we come. Next chart is the 5-minute spider, starting to get into that little zone that closes the gap at the bottom of that little red zone. We're looking at the QQQs. It also has a little gap. I will fill it in for you. I didn't do that. I'll do it right now. And there it is right there. So looking for a little bit more of a dip. We haven't quite started to close the gap yet on the Qs. They're not quite coming down as fast as the spider. Typical. One day, one leads the way, and the other day, the other one leads the way. Now, 5-minute Qs. Getting close to closing the gap, or some of it, not quite yet, but it did rally back up to that resistance area, the red zone I've got here, and stop cold turkey. And here we are starting to break down pretty good. And the NASDAQ futures do not have a bearish engulfing, nor was it overbought. It just simply gave up the ghost and started to drop substantially today, only lower than yesterday's low, but not really yet lower than Friday. And if we get below Thursday's low, which is a very key important level, then we're probably going to totally make new lows to the move, which I think is going to be happening again in the next 2, 3, 3.5, something like that before the end of the month time frame. The NASDAQ 5-minute chart shows that we got stopped out of our long position that we bought in very late in the day on last Thursday, because that's when the bullish engulfing finally got created. Didn't follow through very much. I made mention of that, I think, yesterday, not expecting too much out of the trade. And sure as heck, we ended up with a very small loss. Too bad. And the Russell 2000 RTY coming down very sharply on the daily chart. This is not quite the same chart formations and or period chart as the other indexes. We do have a very, very, very wide trading range for a long period of time here, essentially going back about almost exactly 2 years. A wide area it's been topping out at several times, and same for the bottoms. So I can't completely rule out that it wouldn't come down all the way to 1750, although I kind of doubt that. Remember, my expectation is that this month, or maybe the beginning of next May, June, maybe beginning of June, we are going to bottom out, and it's going to be a very important low, and it's going to begin a longer term bull market move into new historic high ground for quite a while. Interest rates will actually start to come down. The market will be confident that the rates will continue to slowly come down over time, a little faster, a little slower, but the point is start to come down. And the next chart is the Russell 5-minute chart, and it's starting to slip. Okay, notes and bonds. We got the, I'm sorry, this is the NASDAQ futures, June futures contract, new low for the last couple of days, Friday, Monday, and today, Tuesday. And when and if it makes a low lower than Thursday's low last week, we will probably be on our way to new low ground completely. So, and I'm looking for that. I'm expecting that. I think it's going to happen maybe this week, but pretty soon. And here's the 5-minute NASDAQ June futures contract, bouncing momentarily. Okay, and a couple of great trades, by the way. We got short at pretty much the top of the Dow Jones, 5-minute chart. And that was the Dow Jones, by the way, daily chart here. I'm sorry, mislabeled them. Wasn't looking at the symbol. We caught the top and we caught the bottom. The top produced a really great short sale for a few weeks, and the bottom created a small profit for a few days. We're flat at the moment. Again, the 5-minute Dow, YM, and finally bonds. I have redrawn slightly the downward slanting channel or wedge or whatever you want to call it, pennant. This looks better. So I'm going to keep this for a while. I like the way it looks. Prior to this morning, we had dropped a little bit below the support line and then bounced back above it again, then dropped a little bit below and bounced back again. But this line now has 4 or 5, if you wish, points on it, which is more profound. The support area I've got in yellow here is trying to hold, but not doing a very good job of it. We're dropping below, back up inside, dropping below, and at the moment we're trying to drop below it again. We've got a minor outside down day. I believe the high is a tick higher than yesterday's high, and today's low is a little tiny bit, a couple of ticks below yesterday's low. A bearish engulfing. And if we close lower, and it looks probable, we'll get a little bit of a sell signal. A bearish engulfing candlestick is a sell signal, but not as profound as mine, which incorporates the customized relative strength in the signal. So I'm expecting it to drop off a little more. 10-year notes, same thing, slightly higher high, slightly lower low, bearish engulfing at the moment, inside the channel. And these lines are exactly parallel, I believe. So that draws a conclusion that we have a pretty good channel. Downward slanting formations in a general sense turn out to be bullish in the end when they break out to the upside. That's usually what happens. So that corroborates my expectation that in maybe a few weeks, a month, we're going to see this thing start to make new highs for weeks and then a month or more, and then break the bear trend line across the top of the downward slanting channel and have a beginning and somewhat confirmation, if you want to use that word, of a breakout, and up we go. Now, crude, heat, unleaded. We've got a dip down touching today, the neckline I think I drew yesterday. The downside objective, if this pattern works correctly, is a minimum would be 74.25. And it would break a bull trend line in the process of doing that, and it would break below support levels. We need to get down to the low of the day and then drop into new low ground in order to have the breakout today. But what it looks like is we've touched the neckline. We've bounced back fairly good at the moment, 81.78, 73, 2. And that's not a breakout. If we get below today's low and stay below today's low, more the better, especially if it breaks below the low that we made on April 22nd. And that would be about 80.70 or so. That would be a downside breakout of the pattern, new lows for over a month, and pretty solidly the beginning of a move down to that 74-ish. Next, we're getting oversold now on the May natural gas. But there's something going on with the contango, because if you go to the next contract month or the next one after that, you have a sharply higher market. So there's something going on with natural gas. One chart looks like it's going to start to rally, the May, because it's oversold. And this is now expired. I forgot to change this contract month. What am I doing here? That's not good. That's already expired. I apologize. And let's get the June in here. Good. Okay, same formation, downward slanting triangle or wedge. Little lower in the day at the moment, but not oversold. Still in the pattern. If you draw a chart on the July, it's got a very sharp rally. So I think natural gas is starting to go up. Next, got the gold, June. New lows since the blow off top. Higher highs in price over the last month or two, but not higher highs in the indicator. This month, excuse me, I've done the bars closing Monday around 1 o'clock, 12:15 California time, 45-minute show for an Ninja Trader. That was 5 times I did it yesterday as well. And I mentioned this blow off top in the last couple of weeks. And now it looks past tense. I'm looking for a move down to about 2,200. That's pretty good support. Not fantastic, but pretty good. So let's see if we can get down there and how it handles that. Because by the time we're there, we're almost certainly going to be oversold. We're already down to 33. Silver, kaboom. In the support area, dropping into new low ground sharply this morning, near low and last. Doesn't look like it's stopping yet, but it is approaching its similar support level, the bottom of this trading range I've drawn a support zone around. And it could bottom out in the next day or two. It's extremely close to my oversold 25, currently at 27.16. So I'm looking for lower levels. What about platinum? Totally different story. Is that strange or what? Going up to resistance, which is at 969. That's where I think it's going to stop, because we're already in overbought territory, and pretty substantially so at 83. 63. And no, I'm sorry, it's not quite oversold. I meant overbought. Doggone it. Sorry, getting mixed up. Oversold we were 3 days ago. That's in support. That's why we're getting a rally out of this and probably going to hit the resistance area and maybe be overbought at the same time. So I'm looking for a move up still to 970 to 980. And there's a chance it could even work a little bit higher into this next resistance area, 101, even up to 103. At the same time, gold and silver may continue to work lower, or they get oversold and bounce a little. We'll see. Interesting combination. High-grade copper. Ta-da! Outside down day, major bearish engulfing, ER sell signal today. This should be, I think, the beginning of a very substantial bear move. We have gaps to close all the way down at, what is this? 4,160, 185, or 4 points, sorry, 116.85. That's where we're heading, in my opinion. Now, we do have a little muck in the road here, some support, as we go into 4,400-ish and 4,000, or gosh darn, I'm messing up the decimal point, sorry, 4.4 down to, say, 4.3. That's support on the copper. Below that is another kind of no man's land free fall. And that's where the gap is, and I'll outline that one for you real quick. From here to there. That could stop the break. The most likely, and it'll take 2-3 weeks, would be the 4,024 area, 4.024, keep doing it, for copper. Looking for a big move down. Your risk is just above today's high or somewhat lower if you wish, but that should define the largest risk, if not less. Next, big down day in soybeans. We'll be looking at soybean oil, soybean meal, corn and wheat in a moment, and then cattle and hogs. Big down day. Now, this does not kill the possible double bottom formation with a buy signal on the second low exactly to the day that worked very nicely for several days, but I don't like it. It needs to stop real quick, turn right up and make a new high, breaking out of the support area, which it's still in. Let's see what happens. If we break below the support area on a closing basis below 1141, that could be really bearish. Soybean oil. Coming down to the bottom of the support area, I've dropped this little arch mark or V mark, which was underneath the low made about a week or so ago, to this low, because it doesn't kill the big long-term bearish head and shoulder, bullish head and shoulder bottom. This is about a 2-year formation. They're very rare to be that big. Most head and shoulder tops and bottoms are maybe a month or two, or 3, 4, 5, medium size. 6 months to maybe a year is on the large. 2 years is rare. Being rare, it's not particularly likely to be one. But so far, it sure as heck looks like it could be. We just have to get up there, rally, stay up there, keep going up. And today, that's not happening. Today, it's making a lower low. But it's still at the right price levels. It's still about the right time frame for a last shoulder low. And it's at the bottom of a support area. So, and it's oversold. So with all those things in my favor to turn back up, that's what I have to say. I wouldn't buy it yet. I hope we get a green bullish engulfing. We'll see. But I'm about to abandon this bullish story if we can't hold today's lows or right around today's lows and start going up. If we keep going sideways to lower, that's not what it's supposed to do. Soybean meal, strong earlier, overbought the last couple of days, probably going to slip back down to support a little bit. But look, we got the bottom of the market to the exact day, February 29th, green bullish engulfing, ER buy signal, said so on the day it happened. Now we're overbought for the last few days on the average, and we deserve a little bit of a dip. Not very far, maybe just down to 341, 338, and then up again. What about corn? We got the bottom to the exact day on corn. Bullish engulfing green ER buy signal. And by the way, you guys know this is automatic, completely automatic, and to the tick and to the second that it happens, meaning all the criteria are fulfilled, it turns green during the trading day. And we generate an ER1 entry for a day trade scalp and an ER1 entry, bullish, of course, long, for a position trade. I'm just showing you the signal, not the exact trades. What about wheat? We got the bottom in the wheat market to the exact day also. That's not bad for grains. Now, we've seen new highs for a few days. It did get overbought and it did get up to resistance. So one yesterday, two today, a little bit of a dip. Should hold just slightly lower and start to make new highs again real soon. What about cattle? Downside technical reaction. Not sure about cattle lately. We gapped down today. So I'm looking for the gap to get closed soon, next few days, week or two. Therefore, maybe a double bottom will develop. Not real sure. I'm going to pass on commentary on cattle and hogs. We got the top of the market, bearish engulfing ER sell signal. That one worked for a day or two back here on March 5th. This one was much better. The scalp, ER1 scalp, made some very good money on that day. ER1 overnight, I'm sure, made some good money for 2 or 3 days. I'm not showing you the trades, just the signal. It is trying to break out of this head and shoulder top. It's a lopsided pattern. The first shoulder is way over here. The right shoulder is in a little tighter than you would expect time frame wise. The upward slanted neckline's okay, and the level at which the last rally occurred is a little higher than one would expect, but it's a body part. It's all there. It looks all right. Now, the question is, we need to close again below the neckline, which it did yesterday. Well, yesterday's close was 102.5, which is at the high of the body. So it did not stay below the neckline. Today, it's staying 90% above the neckline. We need to close below this neckline. I'm going to pass on the New York ICE exchange stuff for today. Let's look quickly at the E-mini. Low and last, almost, still coming down apparently. Don't see any rally for need for a rally at the moment. You guys have a great trading day. Profitable trading to you. Stan Ehrlich, bye-bye.